Today we'll take a look at the Bill company listed on the New York Stock Exchange, as this is a turnaround candidate. The company is at 8.5 billion market cap, 200 millions of turnover. Regarding the turnaround, first take a look at the insiders' transactions, as they know best if something's good going on a company. What we can see is on August there were multiple buys from insiders, quite big. This one from last Sherte is probably a stock repurchase program, but the other ones from Jacobs and Retic are also big, and they occurred here for the $50. As we can see, the stock went also twofold from there. What we can let's see if these insiders already sold. Jacobs, Retic, no, but a couple of other insiders made some smaller sells. This might be a bit concerning, but the most important thing is these guys didn't sell, as there were the biggest ones. Okay, let's see at the numbers. First off, what's going on here? The revenue. So the revenue is at a really fast pace growing, and also the earnings. What we can see is the stock, the company turns profitable. The last 12 months is already 8 million of profit, which gives a margin of 2%. This might not be much, but if you take a look at the pace, it's really going really fast, and may turn around the price to earnings ratio, growing rapidly. What else? The operating income, the profit comes from operating income, and the free cash flows are incredible. It's 300 million dollars already. Also, the cash from operating activities is okay with that. There is no diluting shares in latest years, so this might also be a fast grower, just turning profitable, which is also a good point to invest. The other thing which is worth noting is the surviveness. So if something goes wrong, can the company hold it? So we can see the company is not in too much debt. It's only 0.24% related to equity. The company holds a lot of cash, 20%. It has a strong balance sheet, which means it can pay its own debts if something goes wrong. It has net cash of 200 millions, so the numbers look really nice. Also, let's take a look at the web page, what the company is doing. This is a financial operation platform for the small and medium businesses. I will go through it in a second. Just take a look at the web page. Yeah, small businesses, mid-sized companies. It just automates processes, scale financial operations efficiently. So 7.1 total network members. Okay. Financial automation. Okay, so this is like a cloud service for automating payments. Let's see how the reports look like, so we know more about the company. We'll use this tool to ingest the reports. As we can see, we got the annual and quarterly report, but we of course won't read it because this is really long. We'll make our Panda to read it for us and get the insights. Okay, so first off, take a look at the annual report so we know what the company is about. It's a leading financial operation platform for small and mid-sized businesses. Its integrated platform helps businesses manage payables, receivables, and spending, connecting them with suppliers and clients. Significant portion of revenue comes from subscription and transactions fee. Okay. What was the roadmap for 2024? Continue to invest in platform, expand into international markets. Yes, the company is trying to expand outside of the USA. Unique selling points. Purpose-built platforms, large and growing network, large data asset for AI-driven product innovation. Okay. Approximately, okay, 7.1 million, we already mentioned that. Invest substantial resources in R&D, that's also important. Okay, but this report is pretty old. Let's see at the 10Q from the November. What's going on there? The repurchase program. So we've already seen the buy from the CEO. This is probably the part of the repurchase program. What is the roadmap? Expand partner integrations. What else? No dividends plans. The competition, the Intuit QuickBooks, but also worth mentioning is the PayPal, Square, and FreshBook might be real good competitors, but if we check this more precisely, the Bill is a leader, and looking at the ratings, there is only this Intuit being a real competitor, but I leave it to you to check it thoroughly. What else? Yeah, more or less, this is a good candidate for the fast grower turning profitable, or just the stock turning around. The Finviz assumes the forward P being 40, but if the company goes at the space, I think this will it can really decrease, because imagine if from this 2% margin it comes to like 10, the P2E will decrease 5 times, which will give it like 8. As long as I'm calculating it correctly, but this will be really critical. So yeah, that would be it for now. Thank you for watching and cheers.